It is 10:50 GMT, August 19, 2014. Jay Meisler here with the daily Forex trading outlook. Now, the focus overnight has been on sterling. It came down slightly before the inflation numbers and then gap lower when the numbers came in on the tame side. And it's hard to see Carney having much credibility because once again he whipsawed the market by raising rate hike expectations over the weekend with his interview, and then seeing inflation come in tame and dampening them once again. As far as euro dollar goes, it's been trading around the 130.350 level in the background due to the focus on sterling, but its trend remains down. Yesterday we came in, it was flirting with 134 and the 200-day moving average, and now it has some distance. Plus it had the lowest close for this move yesterday. If it closes here today, it will be another lowest close. Otherwise, a pattern, it's 20 days between 133.33, 134.85, and 17 days between 133.33 and 134.45. But the downside is exposed, especially if it stays below 133.50. At a minimum, it has to get back above 133.50 to at least slow the risk. But I would say back above 133.80 to at least postpone it. Question is how hard is that 133.30-ish and rumored option barrier being defended. But as I've been saying, since we broke 134.75, the risk remains. The next target is 132.94, and nothing in the price action has changed that view, except that we've had quite the consolidation here. Today we have U.S. inflation coming out, CPI, and housing starts. Housing starts are supposed to be strong. Inflation is supposed to be tame. And if we look further ahead, we have Yellen on Friday. Typically, the dollar would, at some stage this week, turn on the soft side ahead of Yellen to at least defend against a dovish statement by it. So maybe the window is until Thursday morning before the market starts focusing on Yellen. We'll see if that is a typical move that materializes. But for now, the dollar has a bid to it, and we'll see if the euro can take out that 133.33 level and stay below it. For now, its focus is on 133.50. If you look at the 4-hour chart, nothing's changed here. We flirted with that 100-period moving average, still sloped down, but we've not taken it out. The key area still is that 133.33 area with 133.42, 43 standing in front of it, and I'll refer to that level in a second. If we look here, no difference. We've drawn this line here, 133.42. We got to 43 overnight, and then 133.30 in the 1-hour chart. 1-hour chart is now has a down trend line, so we will use this trend line right here as probably our key indicator. I was just drawing that, leaving it in. As long as we stay below it, there's a chance, or the risk at the low is taken out. Now, one thing here, and I'm going to point this out in this circle in a second. I drew an article yesterday, actually this morning. It's using pivot points to trade Forex, or for Forex trading, a simple and effective system. It's actually a fairly straightforward article. You click on this link, you'll see it. You look at the price section overnight, the low so far has been 133.43. And that equals S1. Bounced up to 133.55 after the first test of it, and now we're back threatening it once again. So there is some madness to this method. It's a very simple one, easily explained, and I strongly suggest reading it. Click right here. That's the link. Good luck, good trading, and we'll touch base tomorrow.